Hello and welcome to today's video. October may be behind us, but the feeling of bad price action is still here. While stocks keep making new all-time highs, even magnificent 7 names mostly, so it is very concentrated, crypto market had month to forget. As we are nearing the end of classical 4-year cycle, risk is getting elevated to get caught in the next bear market if this time is no different. Of course, it might be a completely different story if we indeed get prolonged cycle this time. But for me personally, best way to navigate this type of environment is to farm potential airdrops that could be hit or miss, but as long as I stay invested via stablecoins only, risk should be smaller compared to classical altcoin investment. That's how I discovered Solstice protocol, a DeFi protocol that is bridging decentralized finance with institutional rails. Airdrop campaign started at the end of September and TGE is expected to be in December, so there is still a lot of time to participate. More on that and how to get involved soon. Before we start, disclaimer, nothing here is a financial advice, I'm just one person with a microphone, always do your own research. Solstice is an institutional-grade DeFi protocol on Solana built around synthetic stablecoin USX and a yield-bearing liquid staking token EUSX. What makes it institutional grade and why I don't like the word synthetic, I will be discussing soon, but first I will focus on the infra. To access institutional grade investment vehicles, investors have to clear a much higher bar than what you would see in public markets. These funds are typically opened only to accredited investors, which means you must pass mandatory know your customer checks, etc. and meet strict financial thresholds, such as minimum net worth or income level. Those requirements are designed to ensure participants can handle the risk and illiquidity that come with private funds, but in practice they also exclude the vast majority of retail investors right from the start. USX is acting as a decentralized stablecoin that any retail user can mint or hold without needing to prove accredited status or meet $1 million thresholds. Yield Vault then tokenizes access to institutional fund. Instead of wiring money directly to a fund manager, which retailers couldn't do, users deposit USX into the vault and receive tokenized shares that track the performance of fund behind the scenes. And the result is that both accredited institutions and DeFi participants end up exposed to the same pool of assets but throughout different rails, one permissioned, one permissionless. I mentioned before I don't like phrase synthetic, and this is because I instantly get flashback to the Terra Luna collapse, but before hitting the panic button you can be relieved as USX is not exactly as UST, even though there are some similarities. First I will start with the peg. When speaking about UST, its peg to the dollar was maintained only throughout the mint-burn relationship with Luna, no real collateral backed it, confidence in the mechanism was everything, once that confidence cracked it spiraled into oblivion. They also tried to have Bitcoin reserve, but it was too late. On the other hand, USX is also a synthetic, so pegged stablecoin to the USD. The difference is that USX is backed by a basket of crypto collateral, BTC, ETH, Solana, perpetual future stables, tokenized treasuries, etc. Another difference is by backing and verification. While UST had no hard collateral, only algorithmic burn with Luna, USX has collateralized positions verified by institutional custodians like Cefu and Cooper, which are recognized names in institutional custody. They provide monthly updates to confirm at least part of their collateral, creating more transparency compared to the Terra. So from risk perspective, there is still a risk as it is synthetic stablecoin at the end of the day, so there is a danger of the pegging, but crypto collateral gives a buffer. Off-chain custody and regular disclosures add additional level of trust and transparency. One additional positive aspect is that they did survive a big crash on October the 10th, which was the biggest liquidation event in crypto history, and while I can try to make arguments here and there why this protocol could be stable, best proofs by themselves are stress tests like this one that we had on October the 10th. Now on the Solstice ecosystem, it is built around 3 core tokens. We have USX, which is a synthetic stablecoin collateralized with hedged assets. Then we have EUSX, the primary yield bearing asset, a liquid staking derivative, which we receive when we lock USX in the yield vault. And lastly, SLX, the utility and governance token. Now I will talk a little bit about yield. The yield by itself doesn't appear out of the thin air. It has to come from somewhere. In Solstice case, returns are generated throughout a delta neutral strategy that combines funding rate arbitrage, hedge staking, and tokenized US Treasury bills. In simplified terms, you can think of Solstice strategy like this: buying an asset to gain from the upside while simultaneously buying protection such as a put option, for example, to guard against downside risk. This creates a delta neutral position that can still capture yield. According to their white paper, Solstice has been running this approach successfully since 2023. That said, the sustainability of the model ultimately depends on user trust. Complete transparency would reduce that concern, but it also opens the door to potential manipulation by large players. Something we have seen before with the recent Binance Hyperliquid events. And now on the fun part, and that is how to get the flares, which are the points in the system to airdrop campaign for SLX tokens. So first, always check the official Solstice website URL before connecting your wallet. There are scam copies out there, stay safe. So the best way to go is to go on their X official site and check the link in their bio. Here I show you the steps and you just follow the steps. So the step 1 is to go to the official Solstice site and press get started. You will be asked to connect your Phantom wallet or another Solana supported wallet if you are not using Phantom. Then the second step, you'll see two options. The first one is the one-click yield and another one is deep DeFi. For now, just focus on one-click yield. After selecting the one-click yield in the third step, you'll be taken to the swap menu. Here you can exchange your idle USDC. From my example, you see 100 USDC for USX. That USX is then locked while you receive the liquid derivative EUSX. Simply enter your amount and press lock up and start earning. And last step, you're all set now. From here you'll start earning flares, which are the points in their ecosystem. Please note that the dashboard is currently not correct, but flares are still being updated off-chain. This issue should be resolved soon. Now that you have EUSX available, you can keep it in your wallet and that's fine, but if you want to maximize opportunity, then you can check Deep DeFi option, in which they offer additional multipliers if you supply your EUSX or USX to specific protocols. So now we again start from step 1, you go back to the option screen and this time you will click on the Deep DeFi instead of the one-click yield. You will be presented with multiple partners markets such as Orca, Radium, Camino and most recently Exponent. The second step for this example, I will be using Camino, but you can use any partner. I'm using Camino since I'm most familiar with it. However, it's worth checking the other markets too because they can offer even higher multipliers. For example, in Camino, if you supply USX, you get 5 times multiplier for the flares, and for EUSX, and if you borrow USX, you get 1 times multiple of the flares. I initially wanted to show you how to supply USX since it offers the highest multiplier, but at the time of making this video that option wasn't working properly. Instead I went with supplying EUSX, which worked without issues. So in third step you click on the 3 dots next to your chosen asset and select supply. Ignore the amount of 199 EUSX shown in my example because I had already supplied it earlier. For demonstration I supplied 50 EUSX, half of the amount I obtained earlier. You can supply full amount if you prefer. And the last step, once supplied, your position will appear on the dashboard and you'll be earning flares at the multiplier of the chosen Camino vault. Keep in mind, other options may show higher APIs, but usually that comes with higher risk. So make your choice accordingly. Also, what I discovered by doing more research is that by only swapping USDC to USX and holding USX in your wallet, you will get 5x multiplier, so it would be smart to have at least 100 USX in the wallet for that goal. Luckily, these are not the only ways to earn flares, as there are additional quests that boost your earnings. And for example, you can connect your wallet and you get instantly 1000 flares. You can enter a partner code and, for example, if you're on a Camino, use KMNO and enjoy 1.3x multiplier. You can link your X account, use referral code and you get another 1000 flares, and the person that referred you get 10% of your rewards. In this case, that would be me. And if you think this video deserves some love, feel free to use mine. It will be in the description of the video. Note that minimum 10 USX is required to qualify. Also, you can hold USX for a set period and patience pays. For example, 1 month hold gives you 6 times multiplier. Check also the other ecosystem quests. There are plenty more ways to rack up. Lastly, I will give a couple of interesting informations regarding tokenomics. The SLX token serves as the native utility and governance asset of the Solstice ecosystem, featuring a fixed supply of 1 billion tokens allocated across several core categories, including ecosystem development, community incentives, liquidity and treasury reserves, etc. Its distribution follows a key principle known as a dynamic distribution. Only when specific total value locked milestones are reached. As demand grows, more SLX enters circulation, while issuance pauses when growth slows. Some details about the full structure are still to be revealed, but Solstice recently surpassed its latest milestone of 250 million in total value locked. It's worth keeping an eye on their X account for upcoming announcements, as new developments could offer additional clarity on the tokenomics ahead of the token generation event. And lastly, some conclusions. Solstice appeared to be one of the more compelling opportunities within the Solana ecosystem currently. Its institutional-grade framework built around the synthetic stablecoin USX and yield-bearing AUSX bridges traditional finance and decentralized access in a way that feels both ambitious and structured. The concept of dynamic SLX token distribution, where supply expands only as total value locked milestones are reached, introduces a sense of discipline and sustainability that many projects have lacked in previous market cycles. That said, the synthetic nature of USX remains the main risk factor. While the system is far more transparent and better collateralized than Terra's UST, it still depends on collateral stability and continued confidence in the mechanism. Institutional oversight and regular disclosures certainly help, but the peg resilience throughout prolonged market stress is yet to be proven. From a practical perspective, Solstice's ongoing airdrop offers a relatively low-risk entry point, particularly for those already holding stablecoins who want exposure to Solana DeFi momentum without taking on full altcoin volatility. The project's ability to withstand October's flash crash supports its credibility, although caution is still warranted. All things considered, Solstice represents a well-designed and forward-looking DeFi protocol aiming to merge retail accessibility with institutional structure. For now, it earns a speculative buy designation, worth exploring throughout its airdrop and ecosystem activities, while maintaining realistic expectations and a close eye on transparency updates. If Solana momentum continues and Solstice follows throughout on its roadmap, SLX could evolve into one of the more relevant governance assets in the upcoming phase of the market cycle. Okay, this is it for today's video. If you want my full in-depth dive, you can check my Substack. For more daily updates and market insights, follow me on my X account, and for other educational content, you can check my website. Links for everything will be in the description of the video. Like and subscribe as a sign of support, and see you in the next video.